All right, guys, so we're going to talk about some of the things that happened this week on the market. The first thing I want to talk about is about the Feds holding off on interest rates and keeping them the same. Now, this is a huge deal for the market. Right after that announcement, we saw the market rally, and Apple also released their earnings. That's another topic I want to cover. So, in terms of Apple, Apple is one of the key companies on the stock market. It holds such a large amount of the market that when they do release good earnings, it's good news for the entire market. So, the entire market will rally. We did see Apple release a great earnings report, even though they lowered their expectations earlier in the month. That is a risky move, if you ask me. But the company did hit $84.3 billion in profit, which was a decline of 5% from the previous year. Not a good sign for the company. Their earnings per share are up 7.5% to $4.18. Now, this is a big deal because they're still earning a good amount of revenue and earnings per share. However, their iPhone revenue has gone down, and other Apple products are making up for that revenue. So Apple revenue is down 14% and other Apple products is up 19%. So Apple is finding a way to balance things out, and other products are like the tablets, the pens, the pencils. So all those things, especially Apple Music, are contributing to Apple making up for their losses on the iPhone revenue. Another earnings report that came out this week was Amazon. So Amazon, obviously everybody knows how much that holds in the market. Amazon had an impressive earnings per share and revenue. However, they did drop about 5%, entering bear market territory the very next day. So why did that happen? The reason why that happened was because they missed their expectations on in-store sales. Now, for me, I don't understand why Amazon would even tamper into the brick and mortar business because they're doing so well online and it's so much more cost effective. But the company did estimate that they will be spending more or increasing their spending in 2019, which is the exact reason why I'm saying, why would you go from online into a brick and mortar business when you were doing so well online? I understand Jeff Bezos' vision of wanting to be such a big company. However, purchasing Whole Foods may have not been the best idea. Maybe partnering with Whole Foods to do a delivery business, a grocery business, may have made more sense, but the actual purchase did not make much sense to me because they were succeeding so well online. Now, their revenue from Whole Foods dropped to 18% compared to 42% from last year. Those are a key number. So not only are you increasing your spending for brick and mortar business, but your actual revenue has dropped. So that is not good news for the company. The stock is down about 5% here the next trading day, and it doesn't seem to be like it's going to recover. Now, yes, the stock is on discount. Most people are going to find this as an entry strategy, and they're able to enter and hold Amazon because it will recover if they play their cards right and they manage their spending on their brick and mortar businesses. And then third company I want to cover, I didn't really do too much research. I know they did well in terms of expectations for sales. They didn't do as bad as people expected them to do. But Tesla, the CFO stepped down. The company was up 3.2% during the trading day before it dropped about 5% right after market close when they released their earnings. So the CFO stepped down. Earnings were good in a way in which it wasn't as bad as it was expected. So they weren't impressive, but they weren't as bad as it was expected. Now, personally, I see a huge future for Tesla. I think it's just starting. It's a young company. It just needs to get its cards played right. And Elon Musk, I feel like he is a very creative person. He's very good in business, but I don't think that he's operating the company in an investor's in a way to impress investors. It's more for his own satisfaction, his own creativity, and so he doesn't really care about the revenue, the earnings per share. He just wants to make sure that Tesla succeeds and gets to its goal of being such a economic and efficient vehicle for the future. And so when you have a breakthrough idea like that, it's not going to be as easy to impress investors. It's just simply not going to be so, you're going to hit some obstacles like, investors not believing in you, the company dropping, the stock not being valued as it should before you actually see that sprout and it booms. So I do believe in Tesla. For me personally, it is in my portfolio for the long term. However, I don't see the company bringing in those huge revenue numbers anytime soon. Before they get their manufacturing in order, they need to find a way to make more affordable cars, more affordable batteries, and then we can start see the company really bloom to what it's going to be. So that's all I have for the market recap for the week. I will be doing another segment next week to see what happens. But overall, the market was driven up. It closed out January in a very impressive way. We did see it jump. This is the best January it's had in 30 years recorded. And so that tells you something. Not only did the January boom play a part, but December was a really bad month for stocks. I mean, the stock market did rally as much as it did in January because it did drop as much as it did in December. Now, thank you for tuning in. Please subscribe to my channel. Again, my name is Q. Feel free to reach out to me. My course is available for pre-order, so if you are interested in learning how to day trade and learning how to make profits daily on the stock market, go ahead and reach out to me. Pre-order pricing is $139, and you get a 12-chapter course teaching you the ins and outs of the stock market and how to trade on it. Again, thank you for listening. This is Q from Ianti Trading. Please subscribe to my channel if you're interested in seeing more videos like this. And always remember to keep a 1% state of mind.